What's up, guys? It's the Purposeful Trader here. Super excited to be here with you guys today. I got my boy playing in the background, Travis Green, and not Travis Patton. Might be a cousin or something. I'm just playing. But today, with me, Travis Patton, aka the Purposeful Trader, we're going to be talking about DKNG, otherwise known as, DraftKings, and how I traded it, when I traded, and why I traded it. Let's go right over that real quick. And right before, I want to say sorry for not having that Sunday scan for March the 21st. I know a lot of you guys were looking forward to it. So next week we'll make sure we get it, no matter what, right? No matter what, right? No matter if I go to New Zealand next week, I'm still gonna get it to you guys. So let's jump right into it. We're gonna go over DKNG, how I made over 20% on it, and how on earth was it easy enough for me to see, and why I traded it. So with that being said, let's get into it. DKNG at 74, as you can see on the left hand side of the chart, right over here, you can see that's where it broke out and actually failed it. If we look back, it broke out all the way up to 74 level from this low of 5.6. I call it 5.6 or 56. 5.6 is a lot easier for me to say than 56.73. So 5.6 all the way up to 7.3, right? So, um, and it even went up to 74. And so, right around this area is when it had a lot of trouble. And as it pulled back, you know, it tried to come back on Monday, the next Monday, 2 weeks ago, and it failed very hard. And anytime it came back up to any of the key levels, as you can see on these red lines, right? Because some of you people may be saying, why in the world does he have red lines there? If you look at the red lines, they're always, if you look up on the right and then just look to your left, you'll see that all those levels either failed or they tested and then failed. So that's what I wanted to see. I wanted to see if there was going to be any fail follow through at those same key points that failed last time and or tried to hold last time. And I got short today, right? My thesis was simply if it passes 74 early in the morning, right out the gate, then I want to try to get a piece of it because I believe it can at least go down to 72 and and 71 ish. Because Friday you had a 7% move from 68 all the way up to 7.3 ish, and so with that being said, without really any pullback except a few cent pullback here and there was no real pullback. There was no real consolidation. So that's what I wanted to be a part of here is the fact of that it may consolidate. And as it went to that 74 level, it got stuffed. And since there was not a lot of buyers, there were more sellers than buyers. Even though it had a new high, all time high, it still was weak. And right around this area is where I end up getting my puts in because I actually shorted these in the options. I had buy buy options, and with those buy options it allowed me to actually make more money, making more money in a short amount of time, especially with a higher price stock. A higher price stock usually does not have the opportunity for you to make 10, 20, or 30% or more from one trade. So I want you guys to be able to see these trades, understand where I'm coming from, and absolutely crush it when the time comes, because the time is really whenever the stock is most volatile, whenever it goes, a few percent in a day. That's when you can actually crush it. That's when you can make the most money. So when it had failed follow through right around the 73.88 level and started to scale downward and end up going right into this marker right here where you can see there was a level of support, that's where I wanted to continue my my thesis and let my thesis run. So I actually had a 71 put as well, and we end up covering near the bottom of this, but didn't get quite the feel of everything. But that's okay. The next time we see it, we'll capitalize more. The best thing about this is we capitalized after we saw how well the stock was actually, unraveling. And I thought the stock could actually pull back and reach that 71.50 by the end of the day. I didn't quite think it would get this high by the end of the day, but I did think, it could get 71.50 ish by the end of the day, and that's exactly where it is. It's 20 cents away. When you're looking at the end of day from where I actually called it, but on this, it was a monster trade, and I could have been a little bit more patient. No, a lot more patient. With most of my trades. As you can see, there was a level here that I covered into with my 72. Well, no, I let it test, and when it went under it, that's why I covered my 72 calls. And when it stayed heavy, it retested this level. That's where I wanted to actually get more aggressive and fade it again for basically another dollar a share. So $2 a share end up giving me on this one when it's usually less than 1%. Well, a little bit, just a little bit over 1%. I actually end up making over 20% on trades that I made, and so that is the options boost, and that's why you know we show options, and we somewhat teach the intermediate version of options as I grow, the community grows. So as I expand my knowledge, I also expand the knowledge of everyone inside of the Purposeful Trading Academy. So glad that you guys are here. And the biggest thing is key levels. That's why you see all these red lines. They may seem confusing for most people, but I drew them based on what I saw over here in the past and those levels holding, not holding, and whatever that case may be. I want to be able to make sure that I'm making the best decision based on the shorting into the resistance. I want to short into resistance. I want to short where there's really no um, chance, or there's higher chance for me to actually make money than lose money. So that's all, guys. See you. That was low key fire, high key fire, low key.